So why is finance so key to the future of energy? You saw it, right? Energy flow is cash flow, that's why. But let me take you back a little bit, just to show you, okay? How important finance is, and this time in the auto industry. So, in 1918, just about 100 years ago, 1 out of every 13 Americans owned a car. Families, not Americans, American families owned a car. 7%. 11 years later, 80% owned a car. So the market pretty much went from early adopters to almost full penetration in 11 years. 11 years. Now, if you had said in 1918 that by 1929, 80% of the American population was going to be driving a car, they would have thought you had 10 heads. Really, right? And yet, that's what happened. Now, the question is, what happened to make this happen? So, in 1919, GM and DuPont started a company, a joint venture called GMAC, General Motors Acceptance Company. And what did they do? They financed cars. And cars were very expensive. A car was just about the yearly salary of an American worker. Okay? 7 years later, 75% of Americans bought their cars on credit. So substantially all the growth in car buying and market growth and market demand came from credit, from finance. Now, this is not the only thing that happened in the US, but the key innovation was financial. The key innovation to take the market from early adopters to almost full penetration was a financial innovation. And I can show you many markets in which this is the case. Okay? Now, let's talk about another thing that did happen. So in 1908, as an example, the Ford Model T retailed for $850, which was higher than the median wage in America. Now, by 1914, the Model T had dropped to $400, $490, and by 1921 it cost $300, which was 62% lower in 13 years. So capital costs did go down by a lot, right? So in fact, the market went from 8 to 80% penetration in just 11 years for mainly these two reasons. One is lower capital costs. So this went 62% down, the cost of an automobile. And financing. Financing credit to basically take a car and pay for it in whatever number of years. So both availability and cost of capital. These were the two things that happened. But notice, the main thing was a financial innovation. Now, let's talk about capital costs of solar. And we've talked about this already. Solar has improved costs, not just, arithmetically, exponentially. So this is a log curve from 1976 to basically 2011. From $65 per watt to 65 cents per watt. That's what solar has done. Now, it's not what I hear constantly is there's no Moore's law in solar. Well, this is pretty darn good. Yeah? It's a 100x improvement. Then take, 5 years. 100x improvement. And, solar is still dropping. In Germany, installation costs, total installation costs, went down 80% from 2006 to 2011. This is total costs, not just PV. In Q2 2012, the installed cost of PV. Now, notice, most PV in Germany is residential. The cost installed was $2 per watt, not euro, dollars. 2.2. Now, in the US, it's twice that. What's up? The US is twice, even though we use exactly the same solar panels. Yeah?
Does that include tariffs?
Good point. Does that include tariffs? Yes. Yeah, this is all costs, right? You mean import tariffs?
No, I mean like Germany has like feed-in tariffs.
Oh, no. Feed-in tariff is the revenue side. It's not the cost, right? Let's not confuse revenue with cost. This is the cost of installing solar, not the revenue that you're going to make selling. Yeah? Now, since the panels are the same, I mean, it's a world market. It means that the balance of system is everything except the panels. In Germany was $1.3 per watt, but in the US was almost triple that, $3.5. So if you look at this, in the US, PV is actually a very small part of the total cost of installation. Okay? Interesting. Now, these are average numbers. And we don't, yes, question.
So what would be included in the deal? Would that be installation and things like that?
Permitting, labor, marketing, gross profits, everything that is not PV. Yeah? Huh? Inverters. If you have trackers, right? And so on and so forth. Everything except the PV. What?
Inverters are pretty much the same. The cost of inverters.
Yeah, I mean, inverters are a very competitive market. It shouldn't be different in Germany and here, right?
As many people adopting it, like our adoption curve is slower, and therefore the cost is higher.
The balance of system, maybe. Yeah, that has something to do with it.
But there's still competing sources of energy that we use and have used, and therefore solar's not.
But this is the cost of installation,
Okay.
right? This is the cost of installation. I'll give you an example, right? So I already said that panels are still dropping, all that good stuff. Now let's talk about balance of system briefly. And what I want to talk about, which is something we don't hear much when we talk about the cost of solar. Permitting. Permitting, yeah? So here is a list from about a year ago of the cost of getting a permit to install solar on your rooftop in California, right? So, $1,500? I mean, $1,500, really? And it takes 35 days, 20 days for you to get the permit. What do they do for 30 days, right, with your application? Now, it turns out that in San Diego, Ventura County, San Clemente, it's 0 days, in, which means over the counter. You go there, you turn it in, they give it to you right there, and it's $0. So it's a wide variation of costs and of time, right? Now, this $1,500 is not much if you're building a utility scale plant, but if you're building a small rooftop solar power plant, it may make a difference. How much of a difference? According to Sunrun, which did a study, the cost of local permitting and inspection adds 50 cents a watt to the cost of a residential solar installation. That's one of the things that add to the cost of solar. Permitting. 50 cents. PV is about 60 or 70 cents. Permitting is almost as expensive as PV. A watt. I mean, does that make sense? And according to Sunrun, this is the equivalent of $1 billion tax on solar. Now, supposedly, these are processes to improve safety and stuff, but in reality, all kinds of people have done studies, and they found that they add 0 to safety, right? And in fact, Germany has basically eliminated local permitting. I mean, the difference between paperwork in Germany and paperwork in some of these cities in the US is just appalling. Yeah? And that's a 50 cent a watt difference between Germany and the US. And it adds up. This is not the only thing, but this is an example of what we call balance of system that should not be there, right? Now, a lot of people are working to streamline and so on and so forth. And I tell you, it makes a big difference. And let me tell you an example. The city of Santa Clara. Who's from Santa Clara? No one. Interesting. Santa Clara went from 2 steps and 2 months to 1 step and 15 minutes to get a solar permit. That's it. You go there, 15 minutes, done. Okay? Now, how did they do it? Simple. They got everyone under one roof. Instead of sending you to all kinds of offices all around town, everyone is under one roof. They train their people. And they train and they focus on non-standard projects. Solar right now is like buying a fridge. I mean, there's not much difference between one and another. Now, if you're going to do something interesting, then yeah, then they focus on that. But as long as you're within standard, 15 minutes. Did this make a difference? Now, this is not the only thing they did, most likely, but here are the results. I checked yesterday. You can actually check real time what solar installations look like in California. It's pretty cool. Go to californiasolarstatistics.ca.gov. So as of last night, Santa Clara had almost 100 megawatts, more than 100, which made it the 3rd largest solar city in California. Now, look at LA and San Diego. LA is probably 10 times larger than Santa Clara. San Diego is probably 3 or 4 times larger. And yet, Santa Clara's neck and neck. Now, look at just a year ago, January 2012, where is Santa Clara? Nowhere. Okay? See how these small things can make a difference? Now, this is, those of you who looked at the LinkedIn, who joined the LinkedIn group, you probably saw a link to a Department of Energy page where they're offering $12 million for projects to cut back on the balance of system. So this is not technology. This is not about making PV more efficient or cheaper, but about making the balance of system more efficient and cheaper. This is about software. This is about processes. Does that make sense? $12 million. Check it out. Business opportunities. Okay. Now, Let's talk about the cost of capital. As you saw in the spreadsheet, cost of capital makes a huge difference. So there have been all kinds of studies of power plants out there. This is a study from an Australian research institute. And this is what they found. If you go solar radiation, which is the fuel for solar power plants, right? When you go from 2000 would be probably San Diego, to 3000. This is DNI, this is the radiation, kilowatts per square meter per year. 3000 is the Atacama Desert in Chile, which is the best sunshine in the world, right? 3000. If you go from San Diego, say, to the Atacama Desert in Chile, basically, your LCOE, your levelized cost of solar, will improve by about 35%. That's a long flight, right? To improve 35%. Now, look at the improvement when you change the cost of capital, the weighted average cost of capital, which is both equity and debt. You can go here from basically if you start here, you can cut back 80% of the cost by just going from, let's say, 6% to 0% finance. Now, what is the cost of a treasury, US Treasury bond right now? Does anyone know? 3-year Treasury bond. What is it? Anyone? It's like 0.2%. So it's here. If we get that kind of debt here, we can take the cost of solar down by 70%. Now, this is where the market is right now, okay, which is pushing the cost of solar up by 2-3x. So in fact, technology is so cheap right now that, again, the theme for tonight's class, finance, at this point, the cost of capital is more important as a determinant of the cost of solar than solar radiation. Okay, so simple and low-cost financing is the key enabler of the clean energy economy right now. Not that we're not going to do more technology development. We have to and we will. But at this point, to enable the market, just like the car market went from 8 to 80% in 11 years, to enable that, we need simple and low cost of capital financing.
Will financing gone wrong?
Huh?
Solyndra?
I'm not talking about financing companies. I'm talking about financing projects. Yeah? This is project finance. So take a solar project, rooftop, commercial, desert, and finance that project. That's what I'm talking about. Okay? So finance, as we saw, can enable a lower cost of energy. And in fact, we're going to talk about, how this hybrid model worked in New Jersey, the Morris model. You can get solar for 3 cents. See, now we know why. Go off to that spreadsheet, put up the cost of solar today, and put up 1% or 2%, which is what a government can get, and you get these numbers, right? So solar finance can enable lower cost of energy, which can enable market growth. So if you look at third-party finance, all the companies that have emerged here in Silicon Valley, third-party finance, Sunrun, Sungevity, Solar City, et cetera, they're basically companies that finance solar. I'll show you a couple of numbers, right? Third-party finance was basically all the growth in solar in California over the last few years. I mean, cash sales went basically flat. Third-party finance went up like that, right? And in fact, 70% of California residential solar is third-party financed. 70%. Now, does anyone remember the numbers in the auto industry? What percent of auto buyers after 11 years did credit?
75.
75%. Right? California, 70%, and 80% of Colorado and Arizona buyers. So it's in that 70 to 80% range are third-party financed. Okay? And interestingly, I looked at Solar City, which went public recently. So I looked at their public records. And here's what I found. If you take, so not 100% of the systems that they install are financed. Most of them are, but not all. And here's what they show. Systems that were acquired for cash made Solar City 15% gross margin. 15%. Systems that were financed by Solar City made them gross margin. So, all right, let's understand this. Lower cost of electricity and higher profit for the provider. Nice. Right? I mean, who's losing here? Who's losing in this equation? Okay? And market growth. Does that make sense? Pretty cool, huh? So Solar City would rather you financed with them because it's 70% against 15%, right? So it's a virtuous cycle, and I'll end this. We'll do the bio break. Lower cost of capital enables a lower cost of energy, which enables both demand growth and higher profit margin. Yeah, that's what we just saw. Which means that the installed base is going to grow. And what happens with the learning curve when the installed base grows? Learning curve of solar is 22%. So the costs keep going down. Which means what? The more, the higher, the bigger the installed base. Bankers feel more comfortable, so they push costs of capital down. Right? PV goes down, cost of capital goes down, virtuous cycle.